Okay, lads, this is the 2017, sorry, it might be the 20, yeah, 2017 service run. I have it saved as 2018. I'll change that later. Um, Gavin asked me to work on this for him, and I've no problem doing that. Same for all of you. If you want to, if there's any question you're struggling with, just come up and ask, and I'll then, because I've got more time in my hands now, I can hopefully make a video of each individual question as we go. Just um, make sure to ask me specific questions, okay? So, like I told you earlier on, maybe yesterday with the incomplete records, the first thing I would do, I'd have a read at the bottom and see if there's anything new. Okay, see if there's anything coming up that we haven't seen before, and then how do we manage it? So I can see here the closing bank figure doesn't take into account bank charges and it's on our check. Okay, so I'll deal with that. Probably see that before, but we'll deal with that again. The payment for laundry, right? This is completely new. So the payment for laundry includes 2,700 for 3 weeks' wages paid to replacement fitness instructor, and you have to provide for 2 more weeks' wages due. And how do we go about that? That's actually not that difficult. It's just a movement of money from one place to another. We'll just make a note of that, and we'll come back to that later. Um, that we've seen before, and this here. This is new as well. So you can imagine 2017 or 2018 when they got this question, like there was, you think, all service firms that would have been expecting it, looking forward to it. And then there's 3 little new areas that they haven't seen before. But they have seen it before. It's just not in the context of service firms. So they would know, everyone would know how to do it. And the key to this is not to panic when you get this stuff. Okay. So I'm aware of all that. So I'm just going to go through the questions sort of only cold sore, so it's a bit. Anyway, so first job anyway, prepare a statement of the company's reserves on the first of the first. First thing we always look is the depreciations and how many years depreciation is there on the assets. So there's 3 years depreciation. Anyway, we put in our assets and liabilities. So we've got buildings and grounds. So buildings and grounds starts off at 600,000, and there's 3 years depreciation. And we go down to the bottom, and we can see that the rate of depreciation on the second page is 2%. Okay, that from date of purchase, that suggests they're going to buy a piece of land somewhere. Anyway, we'll get that after. So 2% a year, so that's 12,000 for 3 years. So your depreciation then is 36,000. So we take that away, and we get 564. Okay, second one then, you have equipment at cost. And we've got our equipment at cost is 80,000. And we have to take away our accumulated depreciation there. So it is 20% of cost. So 20% of 80,000 is 16,000 by 3 would be 48,000. So that gives you 32,000 as the value of your equipment. And then our third one will be furniture. And with furniture cost 40,000. Furniture is depreciated at 20% of cost. That's all we need to know for the time being. There's some changes on that. So 60% of that, or 40%, sorry, 20% of 40,000 is 8,000. By 3 years is 24,000. Okay, so the value of the furniture is 16,000. So there's nothing new so far. Stock and shop 5,000. That's an asset. Stock feeding oil 1,800 is an asset. Contract cleaning prepaid, that's an asset as well. The money's owed back to us. And now next one is one that got a few people. Investment interest due 300. It's an asset. Now, if you have investment interest due, it implies you have investments. So I'm going to come back to the investments in a second, okay? But if you have investment interest due, you must have investments. You can't be due interest if you don't own something. Anyway, liabilities, you've got creditors for supplies to the fitness center, 2,000. Members' fees paid in advance, that's a liability. You owe the money back to the members. And the authorized share capital is 500,000. You never do anything with that, but issued share capital is 350. Okay. In this middle part, we know we're going to have to put in our bank balance. So we've got our bank balance, which is 59.5, cash at bank. We'll have our loan and our loan interest due. Now, again, this is new, right? And if you can imagine the mayhem this caused at the time, but it's not actually that difficult. So it says, you've all seen this since a few times, but it says bank loan plus 15 months interest at 4% on the 1st to the 4th, 2016 is 63,000. Okay, perfectly honest, if I came at this and I wasn't sure what the hell to do, I'd look at that and go, well, the chances are that the bank loan is 60,000. And if I didn't know what to do, I'd just take a guess that the bank loan was 60,000 and the interest was 3,000, and then work out the loan interest due. Now, I don't know if that is the case, but I'm going to work it out. I'll show you how to work it out. So, oh, that's it done there. I'll do it again. Hold on. Must have been doing this question with fifth years. Right, so the loan is 100%. We know that, right? So if we're working out percentages, the loan is 100%. The interest is 4% per annum. Okay, that's for 1 year. If we're doing it for 15 months, if we multiply 4% by 15/12, that'll give you 5% in effect. So the interest plus the loan interest due, in effect the loan interest due is 1%, right? All of that added together is 63,000. So 105% is equal to 63,000. So if we take the loan of, which we know is 100%, and we go 63,000 divided by 105, divided by 100, and that's equal to 60,000. Okay, so that's 60,000 there. So the loan is 100. So I'll stick that down here. Sorry, over here. 163 divided by 105 multiplied by 100. And that gives you the loan. The loan interest then is 4% of 60,000 for 1 year, which is 2,400. And then 1% of 60,000 is 600. That's how I would go about doing it. There's a few other ways of doing it, but once you know that the loan is always 100%, the loan interest for 1 year is 4%. So if it's 15 months, 4 by 15/12 brings it to 5%. So 105 is 63,000. 100% will be 60,000. And then your loan interest for 1 year is 2,400, which means your loan interest due at the start for the 3 months for, sorry, I have that wrong. Your loan interest, just reverse that around, your loan interest will be 1%. Your loan interest due will be the 4%. Okay, and where I got the 5% in total, I took the 4 multiplied by 15 divided by 12. So we paid the loan back in the first of the fourth, so it's only 3 months this year, okay, and then it's 12 months before that. It's a couple of different ways you can go from there. Anyway, I'm going to put in the 60,000 for my loan, and my loan interest due is 2,400. Okay, all of us have seen this in previous questions. Don't panic if it's shown that way or the other way. Just work it out slowly. The last thing then is the investments, right? So I said if you've got investments, interest due, you have to have investments, right? So let's have a look, and you'll see that you got interest on 3% investments is 3,000. Just check at the bottom to see there's no investment income due at the bottom, which there isn't, right? So to find my investments, my investment income is 3,000. There's a due of 300 at the first of the first. That means your investment income for this year is 2,700. So 3%, because it tells you it's 3% investment, so 3% equals 2,700. So 100% is 2,700 divided by 3 multiplied by 100, which is 90,000 euros. Okay, so in my investments up here, that's 90,000 euros. Now, I would, just so we're clear, I would put in the investment income there, because you don't have to, but I'd forget about it. The investment income for the year is 2,700. That number there that we've worked out. So I would panic about that, but or I would forget that. You're probably better at this stage, not forgetting things than I am. Anyway, we're going to add up our we'll add up our assets. Uh, 768,800. Add up our liabilities 417, and take them away from each other. And your capital on the first of the first is 351,400. Interestingly enough, and this is to do, you've seen in the news about bell curves and all that. I had a look at the market scheme earlier in this when just after Gavin asked me about it, and the loan is only worth 1 mark. So it's very, very low marks. So obviously a lot of people got that wrong first time they're seeing it. Anyway, that's that done. So that's the first part done. So we can move on then to the shop trading account. I'll do that immediately. Like so, it's as easy to do it now. Now just check for, well, there won't be there, but just check for debtors and creditors with sales and purchases. If they're there, you treat them the same as club accounts. So take your debtors or creditors at the start of the year, add your debtors and creditors at the end of the year to sales and purchases. If they're there, but only for the shop. So shop receipts 85,000. Just throw that in. There's no debtors or creditors. If you ever look in the marketing schemes, opening stock purchases and closing stock are just done as a working as cost of sales. I always show them separately. So your stock in shop is 5,000. Your purchases for the shop is 38,600. And your closing stock for the shop should be down at the bottom here, 1,800. And that gives you 43.2. Then to your working 5, I was going to say it's nearly always working 5. It's working 6 in this one, and you have to take away your expenses. So your salary's 24,000 paid to the secretary who runs the shop, and 60% of that, 60% of the 24,000, which would be what would it be, 14 something, 14.4, would be for the shop, and 300 of the light and heat, 850 of the insurance, and 400 of the telephone. Now, my policy for that is to take those four and put them in your expenditure. Okay, straight away. So just in brackets. So the light and heat was 300. The insurance 850. And the telephone 400. Okay, the other one, which I would always put in the expenditure immediately, and I didn't do it, was the loan interest for the 3 months. So from what I remember, it was 600 or something, was it? So yeah, loan interest was the 600. I would get that in because that's one you can easily forget. Okay, so that's the part B done. So we're already up to 28 marks there. We're flying along at it. We'll do C and D together, the rest of C and D together. So I'd restart at the top. All right, and I've got buildings and grounds. Now, this is where it starts getting a little bit interesting. We've got buildings and grounds here of 600,000, and then it told us we bought more buildings. Okay, we purchased another building for 150,000. So buildings and grounds goes up to 750. Now, where that really becomes interesting is in the depreciation of buildings and grounds. Remember, we have depreciation for 1 year on each of these. Okay, so let's have a look and see what it says. Normally, you just buy the building, whatever date, and you depreciate, or you have it for a full year and you depreciate. This time, it's nearly like a question one. You've got 600,000, and then you have a further 150. So for the first 3 months of the year, you have 600,000, and for the remaining 9 months of the year, you've got 750. So that's our depreciation. Okay, here's what I did earlier. I did this. Sorry, I'm going to delete the rest of these because 38. So it's 2% of 600,000 for the 3 months that you have 600,000. So you can see here, first to the fourth. So for 3 months you didn't have this building, but for the last 9 months you did. So it's 2% of 750 by 9/12, which is 11,250. That means your expense for the year is 14,250. Okay. Now remember, your accumulated depreciation, assuming you haven't revalued, they often revalue these. Obviously, we haven't revalued. Your accumulated depreciation then is your 36,000 plus your 14,250. So your 36,000 from part A plus your 14,250, which is what, 36 for 50,250. Okay, so the value is 699,750. Just be very careful that you didn't sell any land, which we didn't. Okay, and also make sure that, yeah, it's 2% of cost from date of purchase. I sort of just went ahead of myself there. Next one is equipment that cost 80,000. Now we're looking. Did we sell equipment? No. Did we buy equipment? No. So it's just 80,000. And we know the depreciation rate for equipment is 20%. So your depreciation charge for the year for equipment is 16,000. So in my expenditure, depreciation of equipment, 16,000. So then in my balance sheet, my accumulated depreciation is going to be 48,000 plus my 16,000, which is 64,000. So that leaves me with equipment worth 16,000. This is where it gets a little bit exciting. The furniture. So again, the poor lads who did this question wouldn't have seen this before, but again, they have seen it before in question ones. Yeah, I started off with furniture of 40,000. You sold furniture which cost 20,000. And then you bought furniture which cost 12,000. So your furniture cost, I'm going to do this as a working maybe just to keep it um, for you lads to look at later. Your furniture cost starts off at 40,000. Take away your sale. That's off the cost level, so 20,000. Then add in the furniture you buy. And the furniture you buy is what did it cost? Sorry, where somewhere. It's 12,000. So that gives you furniture of, what's that, 32,000. So your cost figure is 32,000. Okay. Now, depreciation. Just read what it says. So, furniture held on the 31st to the 12th is depreciated at 20% of cost. No depreciation is charged on furniture in the year of disposal. So, your depreciation charge for the year is just 20% of 32,000, which is 6,400. So it doesn't matter when you sold the thing. Anytime they sell furniture, they don't depreciate it that year. So you don't have to worry about when they sold it. You don't have to worry about splitting your numbers up like in the buildings or anything like that. You just depreciate the 32,000 first, and that becomes 6,400. Now, however, you've disposed of this furniture here that cost 20,000, which means you've also disposed of its depreciation. So that furniture that cost 20,000, its depreciation rate was 20%, and you had it for 3 years. So all fixed assets have 3 years depreciation. So that fixed asset, I'll do it as a working depreciation on the furniture sold. This is disposal of depreciation, really. It's 20% of 20,000 by 3 years, which is 12,000 euros. So now when you have your accumulated depreciation on furniture, you started off like question one. You started off with accumulated depreciation of 24. Sorry. You're adding on the charge for the year, which we just worked out to be 6,400. Then you have to take away the depreciation you sold. So we've disposed of the furniture. We've also disposed of its depreciation. So so that's going to be 18,400 as our accumulated depreciation. Okay, I'll just put that in. Okay, so that gives you 13,600 there. And then finally, anytime you sell an asset, you make a profit or loss on that asset. So just like with your question one. Okay, so the profit or loss on furniture. So to do that, we compare its value to what we received. So its value is 20,000 minus its accumulated depreciation that we disposed of, 12,000. So its value is 8,000. What do we receive? We received 10,000. So therefore we made a profit on the sale of the furniture. We got €2,000 more than what it was worth. And the profit, of course, is an income. So that's going to go into our income up here. Just while I'm there, I'm going to finish off this bar trading, or this shop trading account. I thought I'd finished it. And the profit is 27,250, which again goes in our income. Uh, 27,250. Okay, so that's that done. So that would have been, might have thrown people time wise as well. So you just try and get through it as quickly as you can, remembering you have seen it all before. So stock feeding oil is next. So we're into our workings, right? Our normal workings. So stock of oil is generally our light and heat. So we're going to do our light and heat. So start off 5,600. Opening stock at the start of the year is 1,800. There's no electricity due to start. Down to the bottom, there's a stock of oil of 400, which you'll have to take away. And then see, is there any light and heat due? There doesn't appear to be. So we can finish that out. Of course, you don't have drawings in these questions. So your light and heat is 7,000. And then you have to remember to take away the 300. So that's 6,700. Okay, that's light and heat done. Investment interest due. Well, we've done the investments. We've done the investment income, I think. We've put that in, yeah. Creditors for supplies to the fitness center. So we've got our purchases of supplies working. So purchases of supplies are 43.2. Okay. Creditors are last year, so we take away our creditors at the start of the year. What are they? 2,000. And then of course we add any creditors at the end of the year. So that will be down at the bottom. Uh, 3,600. And that'll give you the 44.8, which is your expense. Okay, we're applying it now. Members fees in advance, so that's our members fees working. Last big working. So our membership fees in advance are 270. Sorry, we're going to take away our membership fees. Add our membership fees in advance from the start of the year. Okay, because there are people who've paid us last year, but it is for this year. That's 3,000. Then at the bottom, then there's a prepayment for next year. The prepayment for next year is 4,200. Then you've got a due to add on at the end of the year of 2,700. Okay, and that gives you 271,500, and that's our income. Now you will notice that there's this 950 dishonor check. You can completely ignore that till the end. Okay. We'll show you what to do with that at the end. Okay, so authorized share capital 500, issue 350. Let's get them into our balance sheet. And we can get down it here. Balance of bank, you do nothing with. Membership fees, we've done. Interest on investments, we've done. Shop receipts, we've done. Sale of furniture, well, we've put in the profit on the sale, so they're all done. Wages and salaries, 83,000. Now, this is my new working, right? Again, this is not difficult. So wages and salaries start off at 83,000. And then it says down here, the payment for laundry includes 2,700 for 3 weeks' wages paid to the replacement fitness instructor. So that is, like, that should be included in wages and salaries. So wages to fitness, right? I don't really know what I call it. So 2,700. It then asks you to, so that is how much a week? So it's 3 weeks' wages. It's obviously 900 a week. He's asking you to make provide for 2 further weeks' wages due. So we have to add on wages due. We owe the instructor 2 more weeks. So that's another 1,800. Okay, so we take the 83,000, add on the 2,700, add on the 1,800, and that gives you your 87,500 for your wages, right? Now, I'm going to straight away, just so while I'm here, I'm going to take that 2,700 out of laundry. So 11,600 minus the wages of 2,700, and that is 14,300. Because that isn't laundry, obviously. It's wages. So I'm going to put in my 87,500 into my wages. And a reminder to take out the 14,400. Okay, so that's 73,100. And then my laundry, which I might as well do it now. I assume there's no change to laundry. I think it was, what did we say it was? 7,900 or, sorry. It's 8,900. Okay, I'd added it on instead of taking it away in my working, so just correct that. Okay, so that's my laundry done, so I've dealt with that working. And my telephone and broadband, 1,700. I'm going to take away the 400 from that, and that brings me to 1,300. There's nothing at the bottom, I'd already checked. Purchase of shop is done. Purchase of supplies for the fitness center is done. Contract cleaning is next. Now, maybe I did this already. There's normally cleaning in advance. I missed that anyway. I'll do the cleaning one now. So you've got your contract cleaning is 8,300. Add your prepaid at the start of the year. Not sure how I missed it, but it's 200. And then take away the prepaid at the end of the year. There's a payment of 600 for next year, so take that out. So that gives you 7,900 for your contract cleaning. Okay, light and heat, we've done. The building, we've done. Furniture, we've done. Laundry, 11,600, we've done. The loan, did I put in the loan interest? I did, 600. And the balance of bank, 3,300. Now, for the time being, I'm going to put in that balance of the bank because this is what I would have done. It's an asset. It's on this side here. It'll come below the line, so it'll be an asset. If I was doing the question, I would have had that like that. Now, 3,300. And maybe I would have read beforehand that there was bank charges or whatever, and I could fix it, but I won't. I'll leave it for a minute. I'll leave everything else in. Okay, so I've everything from here in, I'm down to my bottom. I've got to put all of these go into the balance sheet somewhere. So I've got my closing stock of shop 1800 and stock of oil of 400. I've got my cleaning prepaid, which we know is an asset. That's my 600. I've got to run out of space here, so. I've got my membership fees for 2017, so that's membership fees prepaid, and we know that that's a liability. They owe the money back to us. Or sorry, we owe the money back to them. So that's 4.2. And then I have my fees due, which of course is an asset. And that's the 2.7. Again, these are going to change. That's going to change in a second as well. Okay, and here's where we see it's changing. The closing figure for bank doesn't take into account bank charges of 110. And bank charges would go on this side over here. And if we saw bank charges over here, where they should be, we would say, well, what are bank charges? Well, they're an expense. Okay, so bank charges need to go into my expense. And what would they then do? Bank charges would reduce the amount in my bank. So we know that this number of 33 is incorrect. So we're going to change it we're going to reduce it by 110. Okay. The second thing we would see is that there's a dishonor check of 950 received from a member in respect of fees. So I'd say, okay, where would that be? Well, it would have been included in here. So this 270 would be 950 less, and then this membership fees due would be 950 more. So in effect, this number here is 950 less. So we've 950 less in the bank, and we also have so we've got our bank at 33. We've 950 less. It's dishonored, right? But it is going to get paid at some stage. So 950 less in the bank, and then we've bank charges, which is also reducing the amount in the bank. Okay. So really our bank figure is 2.2. It's not 3.3. Now, the next thing is, it happened to change the whole subs working. Our membership fees due are not 2,700. You have to add on the dishonor check to that as well, because that money is due again to us. And that is 950. Okay, so our membership's due goes to 3650. So there are the changes with that one there. We've seen them before, I think, but I'm going to just show you again. So this is going fees due is 950 more. So that'll go to 3650. And the bank goes down to 2,240. 2240. So yeah, 110. Sorry, it wasn't 150, it was 110. Yeah. So it's that's correct now. I'll just go down to that working again. Sorry, I know I'm jumping all over the place here, but I'd like to have a right fee. That was 110. So it's 2240. So we've dealt with that now. The laundry is done, except provide for a further 2 weeks' wages due. Well, what's wages due? It's a liability. So make sure we get that in our liability. And that was 1,800, 2 by 900. All of this stuff is done. The creditors for supplies were 3.6. Depreciations are done, and we didn't have to revalue. So that's us finished. Hopefully, Jesus, there's a lot in it. Hopefully, we get this to balance. So we've got our 303,450. Oh, how did I miss the insurance? Sorry. 7.2 minus 850. that's sort of the value of writing them in as you get them. You can't really miss them then if you skip over one. Anyway, we'll add all those together. 186,410, and we'll take them away. And you get 117,400. I'm going to ask you now, that's our net profit. I'm going to ask you to add on the reserves in the question from here on in. And that's 351,400. And if we add those together, we get our profit of 468,440. Okay, and this area is here, so that's your profit and loss balance. This is the area here where I'm most likely to get them wrong, so hopefully that's right. Excuse me. So put that in, 468,440. And then we just balance out the rest of it. So the one thing I'd left out already, just add these up, is the investments. If you had investments at the start of the year, you have to have investments at the end of the year as well. Now, again, just so as to not lose marks, you should always add up your costs and your depreciations as well. Okay, so your total fixed assets are 819,350. Your current assets 8690. Current liabilities be 96. Your working capital is minus 910. So we'll take that away. Get 818,440. So have we a loan? We've no loan, so we've got the 350. This 468,440. This is looking promising. Add the two together, 818,440, and that's our capital employed, and it balances. Okay, just for the theory bit at the end, Fitpro have decided to purchase and install new gym equipment. They've received a quote of 225. Can they afford this investment? Explain your answer. So, what could they do? What things could they, can they afford it? It's 225. Well, first thing they can do is sell the investments. So you can always turn your investments into cash. So that means they only have to get another 225 minus 90. It'd be, is that 135? Can they get another 135,000 out of anywhere? The first place to always check is compare the authorized and the issued. So they can sell an extra or issue an extra 150,000 shares at euro each. They don't have to issue them all, but if they issue the 135,000, sell the investments for 90,000, that covers the cost of the investments costing 225. So they could do that. Now, the second thing you could say, if you wished, you could say is they've just repaid a loan of 60,000 euros. Remember, they had a loan of 60,000 euros, which they were able to finance no problem. So if they wish, they could take out another loan, and they should have no difficulty paying it back. How do we know they've no difficulty paying it back? They made serious profit. So they made 117,000 profit last year. Okay, so the answer is yes, they can afford it. There's two different ways they can afford it. Issue shares, sell investments, or they could borrow some money and use some of their profits. Okay, that's that done. I hope it was of use to you. Quite conscious that took quite a long time, but there's quite a few new things in it. So hopefully it's of some use. I'm going to see you all in